Let's get to the show. This is one of SafePass's thought leadership shows that we put on throughout the year. So please take advantage of all that we offer in the thought leadership space for GRC. Monitoring the financial close process. Coordinating tasks and storing evidence in the most important internal control. Anyone with exposure to either the finance functions or the audit functions of any organization knows that the financial close process is always a key control. While the close process is ostensibly run in an accounting department, it attempts to coordinate across many departments in a graceful ballet from publishing the timetable to submitting disclosures. This all stems from the precepts that an external auditor has ingrained in him or her, probably while still in the womb: conservatism and accruals. Thou shalt never preempt thy revenues, and always preempt thy costs, and thou shalt always match thy costs in the period with thy revenues in the period. It is this last phrase of accruals or matching that gives rise to the need for a coordinated close process. You have to ensure that the costs in the measurement period and the revenues in the measurement period are from the same period of time. This means that all of the activities that change balances in the financial ledgers need to have tickets to the dance: manufacturing, shipping, receiving, payables, receivables. The role that is held accountable for the close process, though, is most certainly finance. The CFO will generally stay above the fray, but the controller will be intimately involved in managing the process. The question on everyone's lips after the books have closed is, what are the results? Having some visibility into the likelihood of being able to publish on the prescribed day will allow the controller relaxed and peaceful sleep. Of course, the real nightmare for the controller and the CFO is that not all of the activities have been completed or were completed in the wrong order, and the results must be restated. The current state, standard operating procedures. The increase in controls consciousness brought about by these scandals and resulting legislation over the past years has meant that companies at least have to show the process that they should be following. Standard operating procedures or process narratives have been a minimum bar to get past internal and external auditors. They scan the document looking for control points and design testing procedures to confirm compliance. Some companies have distilled the activities into checklists to get better delegation and better evidence that control activities have been performed. Where financial close management is headed. The standard operating procedure and checklist model are both necessary components of a financial close monitoring solution, but they're rather static representations of the flow of work. Where the financial close management is headed. Workflow. What is clearly needed of a workflow automation tool is that it will notify people when prerequisite steps are complete, allow evidence to be captured, and record confirmations of completed actions in an auditable store. Where the financial close management is headed, dashboards and analytics. We should, however, not forget that the key users of the system are not auditors. They are the CFO and controller. Their information requirements are to know the probability that they'll be able to publish on time and where any bottlenecks or issues are, so the work can be reallocated. Balance sheet quality. Another component of the close process is to confirm the balance sheet quality through reconciliation. Clearly, there are many control accounts whose balance must equate to the underlying subledgers. In most general ledger systems, there are facilities to confirm this on a daily basis. However, there are still many balance sheet accounts whose balance is not supported by formal subledgers and whose balance is backed by other working papers. Examples of this might be provisions for non-invoice discount or warranty liabilities. These can give great latitudes to move the profit number, and their balances should be verified and justified. While not formally part of the close process, balance sheet reconciliation will feed into a close process to ensure that all accounts are periodically reconciled and that balance sheet quality is maintained. Eventually, when the close process has become stable and predictable, attention will shift on how to shorten the close process. Using critical path analysis, you can find those tasks whose dependencies chain to form the shortest time in which the process as a whole can be completed. Compressing time out of the plan can be either through crunching time out of the tasks or seeking better parallelization, examining dependencies and seeking to allow tasks to happen concurrently.
Financial close operating models. There are a couple of different models that we need to consider when thinking of the workflow. The choice of operating model really depends on the level of integration. If an enterprise wishes to keep very tight control on operations and very closely manage the back office operations, it can drive out some costs, but the subsidiary will be very tied to the parent company. It will be harder to spin out such companies.
In the case where subsidiaries are independent, the close process may only start to come together when results are being consolidated. The coordination between subledgers is happening within the boundaries of the legal entity. In the counterexample, the subsidiaries may be using shared service centers for back office functions. In these cases, many companies may be processed in a single subledger that closes as a single unit. Here, all of the companies will be closed in an upstream department before the activities in the downstream department can commence. As you can see, monitoring the financial close is vital to ensure accurate and timely information to stakeholders. While the process is generally managed from an accounting department, it spans the enterprise. As such, interacting with the close process needs to have very light learning requirements. The heavyweight users are senior managers within the accounting department that need dashboards to understand the process and bottlenecks in the process. Only SafePass has the tools and expertise to give senior managers the confidence that the close process is well controlled, bottlenecks identified, and tasks are fully tracked and auditable.
Let's get to the show. This is one of